Hello everyone, and welcome to FX Addicts Weekly Market Analysis. This is Tim the Currency Professor, and today is March 8th, 2013. We're going to start something a little different this week. I started doing this with the regular daily videos that I do for FX Addicts, and we're going to start this on the weeklies as well. We're going to look through the economic data for the past week and then look forward also real quickly. And just talk very quickly about the events and how they affected the markets. Well, today we had the U.S. non-farm payrolls out, and that certainly moved everything. Pretty much as expected, it moved it quite well. The surprise was that we came in at 236,000. We were expecting 162,000 for the non-farm payrolls. Last month, though, was revised from about 150,000 down to 119. So that was kind of a discouragement. And the unemployment rate also ticked down from 7.9% to 7.7%. So all in all, very good numbers for the month of February, but still not 100%. But it was enough to move the dollar up considerably. The dollar was up slightly going into the report, and then after the report we just rocketed. So everything else falling against the dollar. Now also overnight the Japan numbers came out, and final GDP came out unchanged instead of down 0.1% like they were expecting. So a little bit better. Still doesn't make it all that much of a difference, because they're still not growing, and that's the problem. The final GDP price came in a little bit less, down 0.7%. They were expecting down 0.6%, and so that still shows that there's a lot of deflationary pressures there. Now, tomorrow there's quite a few coming out from China, quite a few economic numbers out of China. We got CPI, PPI, industrial production, and retail sales. Now, the CPI and the PPI probably won't have that much effect. It is expected to be higher on the CPI, about 1 full percentage point to 3% from last month. And then the PPI expected to be down 1.5%, just about in line with last month's numbers. So all in all, probably not market movers. But the industrial production and retail sales could be. That is expected. Industrial production is expected to be 10.4%. So if that comes out above 11%, that would signal a pretty good move to the markets. And if it came out below 10%, that would also signal a pretty good move. So again, if it comes out below 10%, probably a race to the dollar would be the safe haven. And same on retail sales also. 14.5% is what is expected. We would have to see something really over 15.5% to make a difference on the upside, and on the downside probably something around 13.5, 13.7%. That would be bad for like the Australian dollar. It'd be good for the dollar, U.S. dollar. So that's what we're looking at for tomorrow's numbers. Now, next week, looking forward to the next week, we got a few things of note. There is a economic summit in Europe next week. Meets on Thursday and Friday. So those sometimes do move the market. So we'll just have to wait for the run-up of information up to that point and see what the expectations are. Now, on Wednesday we have industrial production for Europe, and I'm sorry, on Tuesday we have industrial production for England, as well as industrial production for Europe on Wednesday. So Tuesday and Wednesday we get industrial numbers, and also on Wednesday we have retail sales for the U.S. Now that can move the markets too, so we're going to be watching that as well. And then on Thursday we have in the U.S. PPI numbers, as well as the current account. Now the current account, if there's a huge difference from expectations, that can move currencies quite a bit. So they're expecting a negative 111 billion. So if it comes out considerably more or considerably less than that, then it will move the market. However, most of that information is already known because imports are already reported this last week, so there shouldn't be too much movement. It's the surprises there that can make the market move. And on Friday, CPI in the U.S. as well as Empire State Manufacturing Index, those can move the markets also. Empire State Manufacturing Index expecting 8.4. If it came in negative, that would be bad for the dollar. If it came in above 15, that would be very bullish for the dollar. So that's the rundown on the economic stuff. Now let's take a look at the markets. Euro today against the dollar, down right now 104. We were down about 140 earlier. We were eclipsing pretty much all of yesterday's big range, and we have since backed up a little bit, but still looks fairly bearish here as we take off most of the gains from yesterday. And on the weeklies, well, right now at this very moment we're negative on the week, so we'll have to see how we actually close. But it does not look good. This will be now the fifth week in a row down. So we are in need of somewhat of a correction, but doesn't look like we're really going to get one. I mean, we're very strongly down. Monthly wise, well, we're turning the corner here. Probably we'll see 3 months down in a row the way it looks, maybe even more, but it does not look good longer term. British pound down again today, down about 71, 72 pips. We were down about 100 earlier. Recovered a little bit, but really looking very bearish here. Looking like this is going to continue for quite a while until we get to about that 142 level like we've been talking about. Now, we do have some support around maybe about 148.60, 148.20, between that area, that 40 pip range there. We will find a little bit of support, and we've kind of blown through a minor support level at 149.63. So we'll probably continue here for several more weeks the way it looks. And on the monthlies, well, we just keep dropping. So it doesn't look like it's going to change there. U.S. dollar against the Swiss franc, big day today, all over the place. Up 81 pips right now. We were up about 120 earlier, and has since backed off, but still very strong, up above 95. We close at this level. This will be the best level we've closed at in a long time. Looks very good here on the weeklies. This will be now our second strong week closing above this minor trend line. So here we are. We're running up again. This is another move on the monthlies now. We need to close above this this trend line, which is right now about 98 or so. We can close up above that for this month. That would be very, very bullish, or get up at least close to it, and then next month rocket through it. That'd be even better. U.S. dollar against Japanese yen, big day today, up 100 pips right now. We were up about 150 earlier. This is the third strong day in a row. We've rocketed past these old highs now. This whole consolidation that we had for just about the full month of February is now behind us, and we're going to move further up. About 97 is what we're looking for initially, and ultimately up around the 100 level. So we could just keep going here. There's nothing stopping us. Monthlies too, very strong looking. Get up around that 100 level. Maybe we back off a little bit, but ultimately we're just going to keep running the way it looks. Euro Swiss, a very nice week this week. Right now we're up about 13 pips, 123.70 area, rocketing up here for the last, well, 4 periods and 4 sessions. Monday we did have a slight down session, but overall still looks very, very strong. We're well above this channel now, and we're going to close up above it. On the weeklies, we're looking very good. We had that spike low last week. That should hold very well, and we're just going to keep moving up here and probably take out the highs in the next couple of weeks sometime. So really does look very good longer term. Euro yen, up slightly right now. We're up about 45 pips. This thing's been all over too. This was up about 150 pips earlier today when the non-farm payrolls came out, and has since backed off. But overall still looks somewhat positive. It's going to have some difficulties in here, really not like the dollar yen where we rocketed up past the new highs. This is going to be held back by the weakness of the euro. So we're looking for this market to kind of stabilize up in here and bounce around between about the 117 area and the 126 area. Very, very wide range, a lot of risk, a lot of volatility, so it will probably do that for a while. The weakness of the yen is what's keeping it afloat. The yen happens to be weaker than the euro is weaker, so at this point we are up a little bit, but we are probably in a stagnant position here for a while, and we can see that on the weeklies. We're looking at it now. Technically we should go up from here on the weeklies, but again we could be capped by that by the weakness of the euro. Now on the monthlies we still look fairly strong, and we are consolidating here, second month in a row, so that's a positive longer term, but we'll have to see how we go. We need to take out the old highs and close above that on a monthly basis to keep this thing rolling, and the weakness of the euro will probably hold that back a little bit. So that is it for this week. If you're not familiar with FX Addicts, please stop on by. We've made a few minor changes to everything, but all in all, we have everything there. We do day trades as well as position trades. I can post them up there so everyone can see on the chat room, and then I can share my screen also. So if you are not a member or you have not checked us out, please do so. There is a 7-day free trial that you can sign up for as well. That is it. Have a very good weekend and a good week trading next week. See you then.